Patriot Nation, believe me, I feel your pain. You bought your home over the last couple of years. You're happy about that, but you kind of had to hold your nose a little bit because you probably locked in at a rate on an FHA loan anyway, somewhere above 6 and a quarter, 6.5, maybe even 6.75. If it's really bad, it might be 7 or higher. And those rates have existed for the last 2 years. But I'm going to solve all that right now. I'm going to give you about a 1 week, 2 week max window to refinance with a streamlined FHA product that's going to streamline your cost. There's no appraisal involved. It's much quicker. And you're going to save any between $200 and $250 a month. So if that's of interest to you, let's kick off this rodeo right now. Folks, I'm the Mortgage Patriot, on your side, nestled here in the Hill Country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So, as always, a great video here because we're going to talk about saving money. And who doesn't want to save money? I don't know anybody. So as I get into that content, look down below and please hit the like and subscribe. Really helps bring my videos to the forefront. Done lots of videos on best down payment opportunities for first-time home buyers, renovation loans for either VA, veterans, or just conventional or FHA opportunities, all kinds of subjects. But here we're going to talk about if you already have an existing home and you bought your home, particularly in the last couple of years in this rate environment where you probably had to accept a rate 6% or higher, we're going to save you some money right now. So let's get into that content right away. Let me give you the big 2-year history of where FHA rates have been tracking. This chart right here shows you starting just 2 years ago, this would be September of 2023, FHA, the average FHA 30-year rate was actually above 7, right at 7. So if you got locked into that, tough times for you, but here's your opportunity. So you can see, though, that it's been tracking, coming down at the beginning of 2024. We were in the mid-6s. We've been floating. But you'll notice an interesting section there in September of last year, 2024. We had the same environment that we're about to enter into. The Federal Reserve, is going to meet somewhere between the 15th and the 18th of this month to decide future interest rates. Now, everyone in the whole world anticipates that they're going to say, we're going to cut rates 25 basis points, maybe even 50 basis points. That's the same thing that happened in 2024. Look at that chart. So before that, the preceding 3 months, you'll see that rates came down in anticipation of that Federal Reserve move. And once the Fed did announce what did rates do, they started going back up. Why would that be? Because once again, the rates were already baked into the cake, so to speak. Everybody already anticipated that this was going to happen. So when the announcement came, rates went back up. So why am I telling you this? Because we know that the Fed's going to announce this in the middle of September sometime. And I have a special offer from one lender only. I'm a broker. I can shop lenders. From one lender across the country, one of the leading lenders. They're cutting their rates and giving you a special deal going into that announcement. And they're going to cut off once that announcement happens, because I think rates are going to pop back up a little bit. So here's your opportunity. Let's get into the numbers right now. So let's assume we got to, I could do 1,000 of these different scenarios, but we got to assume the average is about $300,000 mortgage. If you have a mortgage lower than that, of course, the savings will be slightly less. If your mortgage is higher, well, your savings will be bigger. On a $300,000 mortgage, if you're sitting at 6.5 right now, be it from a year ago, 2 years ago, doesn't matter, I can get you down today to 5.5% on a 30-year fixed. So you're saving a full point. So right now, in other words, if you just try to go talk to your lender, your credit union, whomever, if you have say a 720 or better FICO, they're going to be quoting you low 6s, maybe 6, which is not enough to save from 6.5 to say 6.125 or 6 to 6.5. It's barely, you're not saving much money. But again, because of that special from the lender, if I take you from 6.5 to 5.5 to your principal and interest, which was originally $1,896 based on $300,000 at 6.5, we're taking down to 5.5. That's going to be $1,703. So it's saving you about $193 a month, almost $200 a month. That ain't bad, Jack. So, and again, you can't get that anywhere across the country. And that's only good for a little while. Now, I'm going to improve upon that here in a second with another scenario. In the previous one, we had 6.5 as your current rate. We brought you down to 5.5. That's a slam dunk. No matter who you talk to, that's a slam dunk. And again, that's a special deal only allowed by one lender right now, which I have access to. Now, let's take the scenario that you're at, say, 6.25. Hey, Kevin, I'm only going to be living in my house for another 5 years. Is it worth it? Well, let me ask you this, or let me show you this, because this is even better. I can get you to 5.125. How can I do that? Well, I have a 5-1 arm, meaning you're going to be fixed for the first 5 years at 5.125. You can use this at any rate. But again, in our example, at 6.25, taking you down to 5.125 for the first 5 years, saves you $215 a month. Now, that's pretty significant savings. That pays off a lot of debt per month if you have, credit cards outstanding, or maybe a set-aside account you can create to, for a college fund or what have you. So you've got flexibility here if you're only going to be living in your house for 5 years. And even if you aren't, even if you're going to stay for more than 5 years, consider that 5.125 as a great deal to save money during that time period. And you can deal with the rates wherever they fall. Maybe in 5 years, they may be even lower. Who knows? But so let's go through some other considerations because this is called a streamline refinance. I'm going to talk about that briefly. So all this is accomplished by a loan program called a Streamline, FHA in this case, FHA Streamline. What are they streamlining? Well, there's no appraisal necessary. So that saves you money as well as time. The actual transaction only takes about 15 to 20 days. So it rocks along pretty fast. And so also there's other streamline fees that are reduced. Well, what are they? Title fees, which are normally pretty high, are dramatically reduced. Underwriting fees are dramatically reduced. On our side's commissions are dramatically reduced. So all the fees are probably roughly, 60%, maybe even half of what you would normally pay. So the excuse of, hey, Kevin, this is great, but I hate to pay these another round of fees for closing, well, there's quite a bit reduced. So just know that going in. Now, I want to say this also. So it would look like this. Let's say you've already made your September payment. You have yet to make your October payment. And you text me or you call me at my number 210-317-6514, and you tell me your numbers. Hey, I'm sitting at 6.5. I'm sitting at 6.875, whatever your situation is. We'll crank the numbers out. I'll show you what it's going to cost you roughly to close. And it's going to be roughly what your payment is right now on your mortgage. So let's say on a $300,000 loan, you've been making a payment, a PITI of about $2,700. For that includes your principal and interest, your taxes, your insurance, the whole thing. So that's roughly, hopefully, how much your closing costs are going to cost. So in other words, rather than paying your October payment, you're just going to make your closing payment for this refinance, and you'll start up in November at the lower rate, saving anywhere from, like we talked about, $185 to maybe $250. But in our examples, $185 to $215. Either way, that saves you quite a bit of money, and you can set aside those monies, of course, and grow them in a separate account or fund your college. So all the benefits are just saving money on a monthly basis. So I'm the Mortgage Patriot, Kevin Fagan. Give me a shout and make it a great one.